Welcome to readtheticker.com. Wyckoff absorption, a process in which selling volume is absorbed by buyers, a process in which buying volume is absorbed by sellers. This is a follow-up video to absorption, a demonstration of strength. Just need to give you a few more insights because absorption can be a bit tricky. Richard Wyckoff volume rules by Tom Williams can be reviewed in a video called RTT Trendbauer OBV Advanced Discussion. But simply, the volume rules are like this. Imagine we have a decent rally on the upswing here, breaking through resistance to become support. Say 10 units of volume. We're going to call that a good rally. And on the pullback, we are likely to get either a low, average, or an extreme volume units on the pullback, the support. We're going to review the bullish view. The inverse for the bearish view can be sort of assumed. And now we have another rally where price has fallen. We have a rally up here with 10 units, and we get a pullback filling onto support. This is probably a bit like a double bottom, and we can have a low, average, or extreme volume. Now, absorption does not replace the number one rank Wyckoff understanding of upswing with good volume and a low volume pullback. That is the most desired volume pattern. We have an upswing, so units of 10, then you have a light volume pullback. This shows that buyers on the upswing are reluctant to be sellers on the pullbacks. So that's the most bullish insight you can see. We have a good swing and a light pullback, a good swing, a light pullback. But it does happen where you can have an upswing and you get a rather, on the pullback, you can get a rather large challenge that is absorbed, and then the upswings continue. Same down here, you can get a nice strong upswing, but on the downswing, you can get a rather large challenge. I'm talking unit number 20, extreme volume, and then price can continue on. In both cases, support must hold. This is where the challenge is by the sellers, and it's being defended by the bulls. So, but the first priority is it's best to see a solid upswing with a light pullback. If you do get an upswing and you have a pullback with extreme volume, then and it's defended, that is also a bit bullish, but it is not the favoured response. What's not desired is where you get a strong rally of say 10 units and you get a sell down of 10 units. Now, there's no bias there. You've got no bias saying, well, I've had an upswing of 10 units and I had a downswing of 10 units. There's no bias that the bulls are in charge because there's no selling going on, or there's no truth to show that anything's been defended. It's just really undecisive. So that's why a rally of sort of equal units up and down doesn't really give you any insight to really who's taking charge of the market. You want to see where the pendulum is swung from left to right. So either you've got a light rally or an extreme rally that's been defended. Now, understanding absorption, market psychology and sentiment does matter. For example, if you've had a good strong price rally and you get a nice rally with volume of 10, and then you get a strong sell down, we're talking absorption here, and it's a bit of extreme volume, it's twice as the volume on this side here. That is the first challenge by the sellers. It is defended by the bulls. So you've got a nice up rally, a bias for the upswing, and some strong selling comes in, but it's defended. So then you can sort of say, well, that's bullish because of the absorption stopped any price damage. The volume came in, and that really was quite bullish. And you can actually, hopefully, you see price continue to rise, and you hope there's no second attempt, and anybody who went short there is short covering, and the buying is extended. But the question is, are you likely to get a second challenge on the bounce because the bulls won here, if the bears lost, you have another bounce, maybe the bears and the sellers will have another go down. Now, is that second challenge more likely to be successful? You have to be a bit careful when the market is high because everyone's showing green on their screens for this stock or symbol. So when you've done some selling here and the bulls have soaked up all that selling, that really was in a sense distribution, and the people who sold that could be very happy because the prices they got were very, very high and it was above support. So they just might have another go do some selling. Now you'll know if there's a second attempt and it's defended and support does hold and price goes up, then the market is not done, then it is definitely going up. But as these selling attempts keep on coming in and the bulls fail to defend its support will be broken, and it could quite frankly be a market top. So you've got to be very careful when markets are high and everyone's showing green. The selling can be a lot larger than in other parts of the trend. So market sentiment and psychology does matter. On the market low, for example, prices will be down, and people might you might have a rally, and people might be still bearish on the stock, but because the market's quite low, they think they're on a continuation pattern. But the bulls turn up and start soaking up all the selling, and it's maybe less likely to get it in the second attempt when they suddenly realise that the markets are low, and they better start taking their profits, and they force the price up. So when markets are low, you may see the absorption people might have more chance on a rally. In the end, when you draw the line of support where absorption's going on, that must hold, whether it's at the high end of the market or at the low end of the market of a stop. You just have to understand where price is, where absorption's going on, and the likelihood of another attempt. As I said before in the previous pages, is that the best choice for market advances is a good strong rally with light volume. We're only talking about absorption here just to understand the concept. Let's go through some examples. Okay, so here we have Caterpillar. This is a weekly chart. The red bars are when the close is below the previous week's close, and the blue bars are when the close is higher than the previous week's close. The horizontal red lines are resistance based off pivots that have not been broken. So you've got all these red bars represent resistance which have not been broken by the current price. The blue bars are support, and they have been broken by the current price. And as you can see, the confluence of support going through. Down below we have a net up and down volume indicator. So if you imagine 5 days in a week and you have 3 down days and 2 up days, well, the 3 down days is a negative volume. You add that to the 2 positive days in the week, and you summation up, and then you get the net week up and down volume. There's a video on that one. And here we have our RTT OBV indicator set at half month on a weekly chart with a 5 EMA. Now all the charts look like this. I'm just going to highlight examples. Here we have prices fallen down to support. This is not a market high. This is a sort of market generally much lower. Here's support there, and as you can see, lots of selling went on this period here. And the RTT-OBV showed the strength in the selling. Price held support, but the RTT-OBV did not. That is classic absorption. The more time that was allowed to prove that the absorption was pretty much a demonstration of strength came through. Anybody selling this or shorting this lost, and the buying and they short covering up here. That's a good demonstration of absorption. Down below here we have a more current example of LinkedIn Corporation. Here we have strong support here. Strong support. As you can see between here and there, volume accelerated to the downside. Price has not broken support. We've actually got a bit of a weekly spring here. The RTT-OBV shows that price is very strong on down, very low closes on the range. So the close was low on the range, closer to the low than was the high. This moment of volume here started it all. So at the moment we've got the last, let's say, that 6 weeks, 7 weeks, we've got very strong absorption in here, and if support holds, that would be a win to the bulls. As you can see, the market is elevated. But you've got to give it, I think this has a much stronger bias to the bulls, because look at the time it's taken with its consolidation. So I'm pretty positive on LinkedIn. Here we have, this is SPY. I just want to show the example here. Here we had, back in this period of time, I think it was downgrade of the USA. Here we have support, range-bound price action. And we had lots of selling in this little downswing here. As you can see where my cursor is, very strong selling picked up, and that was pretty much absorbed. But as you can see, the price was after a period of upswing, so it was relatively high, and it was against very strong resistance. We had a bounce that was pretty weak, and then the second challenge came. So here we had the first challenge. Where my cursor is, it was absorbed by the buyers. They can be considered bullish, even though the price was high. You have to be a bit concerned. We got a bit of a pop up. Then the second challenge came in. It was too much for the bulls to defend, and it smashed down. Here we have UAL. This is a bit interesting. We've had the upswing, and price was range bound here. And we get some strong selling down here. You can see this big red bar here. Pretty much every down day that week. You see the pretty much support was broken. So there's some strong absorption here, and it was the bulls defended the selling, and they succeeded in getting an upswing. I think it's starting again currently. You see, we've got a support holding here. Whoops. We've got support holding here. We've got some strong selling in the last 3 weeks. Buyers defending. We may get a spring here. The new AL will still be a buy. Those are some pretty good examples of absorption. Just be aware of the fact that bulls and bears are defending their territory, and solid absorption by one opponent over the other is a demonstration of strength. But market sentiment and where prices actually does matter, because the second challenge is always likely. Thanks for watching.